Please read this disclaimer carefully before proceeding further. Welcome traders to Analysis of Gold. My name is Vic. Thanks for joining me here. Let's see what we have got in the store for ourselves next week. Last week, the market made this move and it kind of created this fake breakout above this FCP zone, and this is where I notified you that this was creating potential head and shoulders pattern, and which could push the price down, and that's what has happened. The market actually fell down and we were able to take a few short positions here, and then as a day trade we were able to take a long trade from here, from this point all the way to near about 1829. It was exactly like that. And in our Telegram group, which is around here, this is what I mentioned. So bull target was 1829 based on what I envisaged, and this was the 1829 level, and the bear target was 1806. But there were more chances of it actually going upwards because of this analysis that we performed using FCP analysis. So this was FCP zone, which acted as barrier here in the market, and it pushed the price into this 200 moving average, which was also being pointed out by what I envisage. Now what I envisage actually makes it much easier, because now once you have these targets, then it actually starts to make more sense. And you do not have to perform a lot of complex analysis for yourself. And this is the target which was reached. And so what we have now, let's go back to the chart. Okay, so this FCP zone is going to act as a barrier again, because it has been acting as a barrier. This was kind of fake breakout, and the market may actually go back down from this. But even before that, let's do one more thing. Let's squeeze the charts out and do a full top-down analysis of gold, because it has been quite a while. So let's remove everything and start from a higher time frame, which is going to be our monthly time frame. Okay, so remove everything, and let's go to the monthly time frame and see what we have got. Okay, so let's see. Okay, so what we have here is that gold made all-time high here, and since then it has been falling back down, which is fine, because it was going almost like in a straight line, and now it is taking a correction. A correction on gold is actually healthy, because after a while, when it reaches a certain level of healthy correction, then it will start to move upwards. But so far we trade what we see. So right now it is falling down, or it is, you can say it is going sideways. So you can have both happen, both upwards and downward movement in that consolidation. But what we have here is that we have a W pattern here. Right, so in our FCP methodology, what we look for is wave analysis. We look at impulses and corrections, and this is what we see. What we see here is that we have this W pattern here. Okay, there are a few complex W patterns here, so let me actually quickly change the color of it so that you can clearly see. This is another one that we have got, and then there is another one which is around here. And because of that, if you remember, in August 2020 we were looking for near about 2070 level, and since then we have been majorly we have been taking short mostly on gold. There have been few long positions as well in there, but mostly short positions. Why? Because once the W pattern is complete, it is expected to go down to a certain level here. Okay, so this is what we have been looking at. Let me quickly clean this up and see what we could analyze it from. So if I draw Fibonacci from here all the way to this place, what we see that market is looking to come to near about this level of 1683 or 1680, near about that level. Just to keep a round number, it will be 1700 or so. So that's quite a possibility here. And if I just put it around here, we can also see that the market may actually reach this level here, so 1726. So this becomes a very good FCP zone that we have got. So let's put that as FCP zone here. Okay. And once you have done that, market is expected to fall into that. There is a good chance that market can actually do that. There is another level which is around here, and that's this level. And there is another level here which is this level. Okay, so all of these levels are very important for us, because the market is still like hovering around them, and like these can act as targets as well. So that's what we have got on monthly time frame. Let's look at it on weekly time frame. On weekly time frame, what we see is that market is creating a kind of M pattern here. Okay, there are few M patterns here. One is this one, which got completed, and that's why the market went up, and now it is creating another M pattern which can push the price down into this zone or even lower than that, but for that to happen, it needs to go through this level first, the midpoint around here. It needs to go through that. So the market will try to do what? Whatever the structure it is forming right now, it may go up and down for some time, and that can give us very good opportunities, but ultimately it is possible that it will try to come down to this level ultimately, and when it reaches this level, we can expect a down upward movement, and if it finds enough bearish momentum after that, then it will come down in here, and after that the gold will take off like a proper bullish scenario. But until then, this is up and down movement on daily basis, if you're tracking it on daily basis or weekly basis. But you see, ultimately, if I just show you what I mean, ultimately this is still going down. It's a downward channel sort of thing which is happening right now. Okay, so it, no matter where it is going, but it is continuing to go up and down, but ultimately it is stepping towards this level, and even before that it is stepping towards this level. Okay, so let's mark these levels and see what how can we play them. So this is also very important, and let's go to the daily time frame. On daily time frame, what we have got here is that the market has created this M pattern, and that's why the market has gone up, and that is why we were able to take that long position. First of all, we were able to take short positions, and then we were able to take long position. Short position, why? Because this is, the market was coming down to test this level, and then once the market completed this M pattern, that's why it went up. Now, not all WNM patterns are tradable, so remember that. In our FCP trading program, we only trade high and medium probability tradable patterns. There are 164 of them, and not everything is tradable. We only trade the ones which are high probability or medium probability, and we have got specific rules for them. So if you are new to this, do not think that each and every M and W pattern will actually work out. No, there are specific and strict rules around them. Okay, so this is what we had, and let's clean this up and look at from a different perspective. So even in this entire structure, what you have here is that we had this M pattern, and that is why we were looking for a long from here, and this is the one that I took, and this is the one which actually was able to give us very good profit targets. Now, last week on Friday, we were able to take a long position from this all the way to near about this level or so. Why? Because of the same thing, because there was another M pattern which was forming. So let's go and check it out. So let's go to the 4-hour time frame and see. On 4-hour time frame, this is the M pattern which was forming right here. You see, most of the retail traders, most of the traders think that this is head and shoulders pattern, which I also notified you about. But for us, for FCP traders, a head and shoulders is nothing but an M pattern. So head and shoulders cannot be quantified, but with FCP technique you can quantify this as an M pattern, and there are complex M patterns. So one is with this midpoint, which is going to finish around here, and another one is around here, which is also going to finish around here. So this was very good zone which I just showed you. This was the FCP zone that we had, and that's why the market went up. And where does it go to? It went to our predefined target shown by Wata and Visage, and also exactly to the 38.2, which is 1827, and that's exactly where it went to. Water showed 1829, it hit that and it started to fall down. And if you're doing it right, then you will also notice that everything lines up automatically, right? So let me actually bring in another indicator here which you might have seen before, and that's moving average. So if I just change the moving average to, let's say, 200 moving average, which is very common, everybody knows about this moving average, and if I just change it to 200 moving average, And if I come down to 1 hour, you see that what envisaged target and that fib and 200 moving average was exactly at 1929. So that's the beauty of this FCP analysis. It actually, like, it aligns everything together automatically if you know exactly what you're doing. Okay, so this is what we had last time. Okay, so what can happen this week? So let's go back to our weekly time frame and start from there once again. So this is what we were looking. Now for this market to go through this structure and reach this level, obviously it will have to go through this level, and that is why we are going to put that line as an important level here. And then we are going to bring in our just 1 second. Okay, our moving averages around here. So what do we see? Okay, so this is what we have right now. Then we go to the daily time frame. On daily time frame, it has started to look a little bit messy. It came right into this moving average and started to fall down, and right now it is also forming a W pattern here. So if I just remove this and show you what I mean, we have this W pattern forming, which can push the price into somewhere around here or even higher. Remember, we are still in consolidation, so it can go up and down like this, right? So that's why we need to find both bearish and bullish opportunities at the same time. So let's measure this and see where we are. So if I draw fib on it, we see that it has come there. So the market is expected to reach near about this FCP zone as well if the market starts to move upwards, but obviously it will have to go through this level first to reach that zone. Okay, so that's one scenario. Other one is if I draw Fibonacci on this. Okay, this has come to 61.8 around here. So if I go to the 4-hour time frame, this is how it is looking right now. It can actually move into, if it starts to move upwards, then it can go into this level of 1835 level, which is here, right there. It can come in there, and once it has reached there, then we'll have to see whether it starts to go down or starts to go further up into that level. So that's what we can see. For bearish side, what we can see, that market is probably going to create an M pattern. Okay, so if you're not able to spot it, then this is how it is going to be. So if the market starts to move down, then it will come somewhere around here, and this will be the midpoint of that, and that is why let's look at this level. So this is the point. So if the market starts to fall, then I'm expecting it to come to this level here of 1810, and that also reminds me that we have a very important level here, which is 1800. That's a round number here. So let me just change the color of that to something else so that it stands out. So that's 1800. So what we have here, if this is broken, then we are looking for this move, and if that's broken, then we are looking for this move. Okay, on the bullish side, this is what we are looking for. This level is also a minor level here, which can be important if you're day trading or trading on smaller time frame. Then this level can be important, because if I go to the 1-hour time frame, what we have is another W pattern forming here. So it will have to go through this midpoint to form anything like that. So let's draw Fibonacci on it. Okay, and it is expected to reach near about this zone. This is FCP zone. Okay, so what do we have? Let's draw it in steps. Okay, if the market starts to go up, how do we read this? If the market starts to go up, right, it will reach this 1831, then 1835, and then it will come to this FCP zone around here. And if this FCP zone is broken, then it is looking for 1855 or so. But around this FCP zone, I'm expecting market to move back down into this level once again. So all of these levels can act as support and resistance. So that's a possibility. Okay, so that's on the bullish side of things. Now on here, even on lower time frame, what we see, there can be an M pattern forming. So if the market breaks through this, okay, let me just quickly change this into steps as well. Okay. Yeah. So how do we read this? We are on 1 hour time frame, remember this, so it may change quite a bit on higher time frame. So if this starts to go down, then 1870 is the next level, and then after that 1810 is next level, and after that we are looking at 1800, and if that is broken, then 1784. On bullish side of things, if it starts to go up, then we have 1831, 1835, then FCP zone, and after that we have 1855, and then we have this FCP zone around 1860 or so. So that's what we have on 1 hour. If we go and look at 4 hour time frame, this is how it is looking. Around this FCP zone, I'm expecting a pullback, so be careful with that. So this is what we have on gold here, and let's look at it on Vata and Visage as well. So on Vata and Visage, what we have is that this is potential target 1870 level if the market starts to find bullish momentum. You see, this is a little conflict or contradictory signal around here, because we have green here, so that shows that market is bullish. But you see, just by looking at the chart, it is going sideways right now. The last bearish target was met, and now it is going sideways. We have got this bullish signal here, and this is bullish, but the Vata curve is still saying that it is bearish. So it is possible that if it finds bullish momentum, then it may come around here to 1870 level. This is on daily time frame, so that's possible. And you see, that will also create this sort of W pattern here. So if we go back to our analysis, which is around here, 1870 level is somewhere around here. Let's look at on daily time frame. That's near about this FCP zone, right? So if the bullish momentum starts to go up, then it can reach there to form this W pattern here. Okay, so that's what we have already discovered here. But if I go to the to lower time frame here, on lower time frame, what we see is that we have potential upward target here around 1839. However, this has not actually turned into green yet, so we cannot assume that it will go there. So far the Vata curve has acted as resistance, so it needs to go through this level before it reaches 1839, and that's what we saw here on 4 hour time frame. So if we come here, remember, it needs to go through this level, this midpoint. Let me just quickly remove some of this fib so that you know what we're looking at. It needs to go through this level before it reaches 1839, or near about this level of 1835 to 1839, near about that level or so. So that's what we're looking at if it starts to go upwards from here. Okay, so this is what we have on gold. Hope you enjoyed this analysis. Hope you found this useful. If you did, help and support this channel by hitting the like button. By hitting the like button, you are actually telling the YouTube algorithm that you found this useful, and then this video will be available to this analysis will be made available to a lot more traders like yourself, and they will also benefit from the knowledge and the analysis in this video. So make sure you hit the like button and support this channel, and I'll see you in the next one. Thank you very much. If you're interested in learning how to analyze the markets the way I do using Fibonacci Confluence, then head over to Vikinsa.com, and under training section you'll be able to see Core Strategy Training Program. On this page you'll be able to see the testimonials of previous students, and also look at the brochure. The brochure has a lot more information, including the course structure and the Fibonacci Confluence Training Program curriculum. This is a very extensive program in which we cover basic core Fibonacci concepts along with the advanced concepts to analyze the markets with high probability. If you're interested in joining this program, come to Vikinsa.com, and under training section you'll be able to see and submit this form.